Yesterday, after the close, Lam Research announced their Q1 2026 earnings. And that's why today I want to have a look at this company a little closer, do a fundamental analysis, and figure out if they are a buy, hold, or a sell. Hello, everybody. I am John, and I will be your host today. Looking into the earnings, the company beat their EPS estimates by 4 cents, while the revenue of 5.32 billion was up 27.6% year over year and was reported as a beat of $90 million. Now, one thing I do want to point out is that for 2026, management expects China region to represent less than 30% of the company's overall revenue. Just to put this into perspective, in 2025, China revenue rose to 43% of the total, which is a lot. Now, of course, Lam Research trying to lower their dependency on China is a good thing because as tensions between the US and China are always on the move, lowering the dependency on China can lead to more stability in the future. But now moving to MoneySense, a site which allows you to very simply but very effectively analyze the company's fundamentals through the 9-pillar analysis, as well as calculate their intrinsic value and figure out if a company might be a buy at the current time. Now we will jump to the summary page, and as we can see through the past year, Lam Research is up by almost 100%, rising from about $75 to $141, which they are sitting at currently. Now, I do want to figure out if currently Lam Research is sitting in the buy range, or if the buy range was maybe around the $80-ish mark when I bought the company personally into my portfolio, or if right now might be a better time to just hold and wait for another drop. Now, to figure this out, we'll jump to the 9-pillar analysis and move to pillar 1, where we can see the revenue. If I scroll down, you can see that the revenue has been growing through the past 10 years, growing at a CAGR of 13%, with the 5-year revenue CAGR dropping slightly to only about 6%. Now, in my eyes, especially taking in the fact that Lam Research is a tech company, a 5-year revenue CAGR of 6% is quite low, and that's why I will rate pillar 1 as a C. Now, moving to pillar 2, we will have a look at the net income growth. When I scroll down, you can see that that has been growing a little better, with the 5-year net income CAGR sitting at 8.2% and the 10-year sitting at 21, almost 22%. So the net income has certainly been growing at a higher rate than the revenue, and that's why we will rate pillar 2 as a B. And now moving to the most important pillar from the financial growth, pillar 3, which is the free cash flow growth. Now, free cash flow is the most important as it is used for share buybacks, paying down debt, increasing dividends, and investing back into the business. So seeing a free cash flow CAGR higher than the net income and revenue CAGR is something very nice. You can see that the 5-year free cash flow CAGR for Lam Research is sitting at about 11%, with the 10-year sitting at 16.51%. Now, the fact that these two metrics are sitting so close to each other tells me that Lam Research has very stable free cash flow growth. Regardless though, the 5-year free cash flow CAGR isn't as high as I would like it to be, especially for Lam Research, which is in the tech sector. So again, I will rate pillar 3 as a B, but it is closer to an A than pillar 2 was. Now, moving to pillar 4, we will have a look at the profitability of Lam Research. You can see that through the past 10 years, the average profit margin was about 24%. Through the past 5 years, on average, about a 27% profit margin, and currently the profit margin is sitting at 29%. So there is no doubt that the profit margin has been growing. And indeed, the 10-year profit margin CAGR is sitting at 7.2%, with the 5-year sitting quite lower at only 2%. You can see that the profit margin has almost doubled through the past 10 years and currently is sitting very near to 30%, which is, in my opinion, a very good profit margin for a tech company. Now, if we scroll down, you can see that the ROIC has as well been growing. The 10-year average sitting at 25%, 5-year at 32%, and currently sitting at 34%. So the ROIC as well as the profit margin are sitting at very good ranges, and that's why I will rate pillar 4 as an A. Now, moving to pillar 5, we will have a look at the price of the company. In other words, the valuation of the company, specifically by looking at the PE ratio. You can see that the 10-year average PE is sitting at 19. 5-year is sitting at 23, and the current PE ratio is sitting at 33.5, meaning that the company has been getting more and more expensive, which of course isn't a good thing, as you as an investor are paying for more money for a single dollar of the company's earnings. Now, I personally bought the company when the PE ratio was at about 23, so I bought it quite cheap compared to what it is trading at currently. Now, a PE ratio of 33 would be acceptable if the company's financial CAGRs were sitting at maybe 15 to 20%, but as that isn't the case with Lam Research, I will have to rate Pillar 5 as a C. Now, moving to Pillar 6, we will also have a look at the valuation, but from a slightly different angle, looking at the price to free cash flow. And as you can see, that as well has been rising through the past 10 years, currently sitting at 31.29. So again, we will rate this pillar as a C. Now, moving to pillar 7, we will have a look at the company's dividend growth and dividend safety. Their dividend yield is sitting quite low, but their dividend CAGR is sitting very high at almost 12%, with the 10-year dividend CAGR sitting even higher at 23%, meaning that if you are a long-term investor, investing into Lam Research might be a good idea, as they are growing their dividends at an astronomical rate. Now, one more important thing we have to look at is the safety of these dividends, and we will do that by looking at the free cash flow payout ratio. You can see that Lam Research has kept their free cash flow payout ratio below 30% through the past 10 years, which is great, especially for a company in the technological sector where they have to direct a lot of their free cash flow into innovation. Having a below 50% free cash flow payout ratio is very important. So overall, I believe that Lam Research has very safe dividends, and their dividend CAGR is very nice and high. So I will rate Pillar 7 as an A. Now, moving to Pillar 8, we will have a look at the debt analysis, and we'll do this by looking at the current long-term liabilities, which are sitting at about $5 billion. And when we compare that to the free cash flow Lam Research is generating, so about $5 billion in 2025, we can safely say that they will have no issue paying off all their long-term liabilities in a very acceptable amount of time, while of course paying out their dividend, with their free cash flow payout ratio sitting at only 30-ish%. So again, I will rate Pillar 8 as an A, as Lam Research has very safe debt levels. And finally, moving to Pillar 9, we will have a look at the 10-year decreasing shares outstanding, where we can see that Lam Research has been buying back shares at a CAGR of 2.18% through the past 5 years and a CAGR of 2.09% through the past 10 years. So overall, you can see that the company has been buying back shares at a very steady rate. So we will give this pillar a B rating. As for an A rating, I would like to see slightly more share buybacks, a slightly higher CAGR in other words. Now, moving to the final rating, we can have a quick look at the 9 pillars. You can see that for the financial growth, we have an average B grade. For profitability, we have an A grade. For the price of the company, the valuation, we have a C grade. And then for dividend safety, we have an A grade, debt A grade, and share buybacks a B grade. So overall, we have a B grade, which would be considered a buy. But now to actually figure out if the company is a buy right now, we have to calculate its intrinsic value. So moving to the EPS valuations in money sense, we will first go through the Graham's formula, where we have to predict the future EPS CAGR. Now for the maximum EPS CAGR, I will predict 15%, medium I will go with 13%, and low I will go with 12%, and this will give us a future CAGR of 13.33%, which is slightly higher than the 5-year average CAGR, but quite a bit lower than the 10-year average CAGR. Now scrolling down, you see that we have a base earnings per share of 3.28, which is the 5-year average. Now, as Lam Research has had the TTM EPS sitting at $4.2, we will plug that in and we will get an intrinsic value of $102.25. So when we rate the company, we will actually get a C grade, which would be considered a hold grade. Now, moving to the Peter Lynch model, we will use the same earnings growth estimates, and looking at the 5-year trailing P ratio sitting at 23, we'll get an intrinsic value of $98.69, which again is a C grade, quite close to a D grade actually. Now, moving to the discounted cash flow analysis, we will value Lam Research based on their future free cash flow. Now, I believe that the company might grow their free cash flow into the next 10 years plus at the highest rate of maybe 18%. Medium rate, I will go 15%, and low, I will go with 13%. Now, to move forward with the valuation, we have to plug in the discount rate. The WACC of the company is sitting quite high at almost 13%, meaning that investors do believe that Lam Research will bring higher returns than average. Now we will plug in the max discount rate at 13%, medium I will go with 10%, and low I will go with 9%, as I believe that a discount rate of 10.67% is quite fair. Now, one more thing I do have to change is the initial free cash flow, as again, the 4 billion free cash flow, the initial free cash flow here is the 5-year average free cash flow. So we will actually plug in the free cash flow from 2025, so 5414, $5.4 billion. And as you can see, the intrinsic value comes out at $137.03, only slightly lower than the current trading price. So when we rate the company, we will still get a C grade. Now, if I was to remove the margin of safety, we will still get a C grade, as the intrinsic value is still about 2.79% lower than the current trading price. Now, moving to the multiples valuation, I want to compare Lam Research to Applied Materials and ASML. So comparing these two companies, you can see that the intrinsic value would come out to $137, which is very similar to the discounted cash flow model. You can see that the average P ratio of Applied Materials and ASML is 30.80, while the P ratio of Lam Research is 30.74. The average price to book value is 14. Lam Research's price to book value is actually slightly higher, and the average price to free cash flow is 33.21, and Lam Research is sitting at 29.63, and thus we have the intrinsic value only slightly lower than the current trading price. So we will rate this company and again get a C grade. Now, moving to the dividend discount model, we will calculate the company's intrinsic value based on their future dividend growth. Now, in my eyes, Lam Research might grow their dividends at the highest rate of, say, 14%, medium rate of 12%, and a low grade rate of 10%, which will give us a projected dividend CAGR of 12% into the future. Now, our discount rate was sitting at about 12.8%, so we will plug that in and get an intrinsic value of $120.04, which is 14.76% lower than the current trading price without a safety margin. So if we again rate this company, we will get a C grade. So now, moving to the ultimate valuation, we will leave all the models ticked in as we went through all of them, and you can see that for the Grams and Lynch models, we will get an average value of $100, discounted cash flow model an intrinsic value of $137, multiples valuation $137, and the dividend discount model $120, which will give us an average intrinsic value, the ultimate intrinsic value of $119.29, which is 15.55% lower than the current trading price, and with a margin of safety of 10%, which is the minimum margin of safety I personally like to go with. We will get a C grade with an acceptable buy price of $107.36. So now, when we actually move to the final rating, the overall recommendation will be a hold recommendation, as even though in our 9 pillars we got a buy rating, for our intrinsic value models we got C grades all along. So the company is a hold with an acceptable buy price at $119.29. With that, I hope that you enjoyed the video. If you'd like to test out MoneySend, you can use the link in the description for a 7-day free trial and 20% off for the first month. Make sure to leave a like and subscribe, as it really helps me out.